Has gold and silver priced that in?
No, no, that will be devastating. The likelihood of a recession is going to rise substantially, and that's going to be very good for precious metals.
They're wrong about gold and silver and the economy. Here's what the Fed and media aren't telling you. Hey everyone, thanks for watching Yankee Stacking. Something's wrong, and it's not gold and silver. The Federal Reserve is what's gotten it all wrong about the economy, about inflation, and about precious metals. Gold and silver are proving the Fed wrong. The question is, how do we keep from making some of the same mistakes that Jerome Powell is making and protect ourselves from coming calamity? Well, let's bring in Lior Gantz of the Wealth Research Group and find out. Hi, Lior. Great to see you again.
Great to be here.
Gold spot price has been strong. Silver seems to be strengthening now, too. Looks pretty good for spot price, but something's not right here, Lior. And I believe it's with the Fed and the media. What are they getting wrong?
If you remember, we had an interview probably 6 to 8 months ago. And the topic in the media then was, are we in a soft landing or a hard landing scenario?
I remember
And I
that.
introduced the concept of no landing. And I want to explain that because that turned out to be 100% correct. So soft landing or hard landing, they meant, what was meant by that is, how do you land the economy, or how do you go from a booming economy to an economy that's slower? Is it going to be a bust, or can you land the plane softly with a very successful rate hike cycle that doesn't end with a recession?
Right.
Now, I'm a pilot since 2006, so I have a private pilot license. And there's another concept in landing that's called touch and go. So you basically, it looks like you're landing. Anybody on the highway or everywhere else except for the tower and the other planes on the circuit, they think you're landing. So it looks bad. Looks like the market's crashing. Looks like everything. It looks like you're landing. But you're just touching and going, and you know exactly what you're doing. You're in control, and you take off again. So it's literally touch and go. And that's what we did. So the market thought we were landing. That's why you had the NASDAQ down 33%, the S&P down 25%, the Dow down 20% in 2020, in late 2022, I mean. And the whole time saying, I was saying, buy this heavily, buy this hard. That's why in 2023, our portfolio was up 54%. If you go to wealthresearchgroup.com/portfolio and you download my portfolio and track those stocks to 2023, you'll see exactly what I'm talking about. The no landing scenario is what we have. This has a lot to do with pure demographics and with deglobalization. Deglobalization means that we need to reindustrialize America. We're done giving away our IP and our competitive advantage and our middle class in exchange for Americanizing the world. The experiment failed. It failed in 9/11. Then China in 2011 becomes a full-on official enemy of the United States, foe. Everybody understands that's in Washington, and we start to move away from globalization. 2016, Trump gets elected because the public senses that globalization is ending and they want to change. And that's what we saw from Trump. Tariffs, which is basically end of globalization, the way that America and China treated COVID differently, it's all deglobalization. We are going through an inflationary period. And initially, the Fed thought it had a lot to do with just closing and reopening the economy from COVID, but they
that was the narrative.
Learned
Yep.
Yes, he was wrong. He corrected himself and started on a massive rate hike cycle. And what he said, just go to the last meeting, he said inflation will be bumpy. And that, in Fed speak, just means that what the Fed is favoring in his dual mandate is maximum employment over inflation. So they're favoring that part of the dual mandate as long as inflation remains bumpy, but not crazy. What I think the Fed is not realizing is that it can turn from bumpy to borderline hyperinflation again, where you
Out of
see
control, right?
6%, 7% CPI back. That will shock everyone.
And I heard former Treasury Secretary Lawrence Summers say on Bloomberg that we have to, quote, take seriously the possibility that the next rate move will be upwards. Wouldn't that cause a complete commercial real estate meltdown and spill into other sectors as well, like the banking sector?
Well, for one thing, Jamie Dimon also said that a couple of days ago. And he also thinks that there will be no rate cuts and that the Fed might need to raise rates again. So
Wow.
it's a very serious problem because the Fed essentially in November said that they got a hold of inflation in November 2023. So there's a lot that has been priced and a lot that has been done in accordance to that. A lot of real estate has been priced according to that. Of course, the stock market is priced according to that. The market has agreed with the Fed. In other words, it has not fought the Fed on this. The fact that we are running all-time highs for gold and it's breaking out like crazy and silver is because the markets are agreeing with the Fed that inflation will be bumpy and that the Fed won't do anything about it. So it will basically, you'll get a hot read and then the Fed will say, we told you it will be bumpy. We told you. It doesn't mean that next month it won't be cool again. So in other words, they're giving you justification to keep investing and to not be shocked when inflation goes up and down. But there is a point where that bumpy starts to look frightening. And that is that risk that Summers and Jamie Dimon are talking about.
Has gold and silver priced that in?
No. That will be devastating.
Devastating. Explain that. Devastating to the downside for spot price?
Absolutely. If you raise rates to combat inflation, you're gonna see a sell-off in gold and silver, but the market will quickly move from the panic sale into pricing in the next step. And if that happens, there will be a lot of distress, and so the likelihood of a recession is going to rise substantially, and that's going to be very good for precious metals. Now, mid 1970s, that's exactly what happened. The Fed raised rates. They claimed victory over inflation. Inflation came back. Gold and silver plummeted 50%, and then surged to the all-time highs. So what I would say is, if you see that and you want to trade it, get out, wait, get in.
Other foreign nations for years now, including China especially, seems to be in on the truth about gold. They keep selling dollars, increasing their gold reserves. I think what that really means is that foreign central banks are foregoing the potential interest that they could otherwise get from our treasuries to hold what really amounts to non-interest bearing assets like gold, even though it's a tier 1 asset.
The reason that central banks and other governments are buying gold is not just because they fear inflation. When you globalize and you trade in America, traded with other countries, it was almost inevitable that those countries have to have huge reserves of US dollars, because you create trade with the United States and its offshoots. And in that world, everybody had to have a lot of dollars on hand. Now, in the last 15 years, the United States has started to wage economic war on about 40 countries with sanctions. Some, a lot of sanctions, some less. And so the process of weaponizing the dollar is a 15-year-old process right now. That's after Russia, it became really bad. And so a lot of countries really fear that in a deglobalized world, the United States will dump them and create more sanctions on them and make it really difficult for them to access the SWIFT, and they need to de-risk. So the role of the United States dollar as reserve currency is basically diminishing. Now, because there's no other alternative, you're not seeing a rush to the exits. But what you are seeing is offsetting those risks with gold, because there are no other alternatives. There are no other viable fiat currency. So it's not that much about inflation. It's more about the role of the dollar ending as a reserve currency for trade around the world. And so we are in this deglobalized world. It's going to keep deglobalizing for decades. And so this process is just getting started. And in that process, central banks will be buying a lot more gold. Keep in mind that in many countries, central banks and governments are the same. So this is a government policy. It's not an independent bank or quasi-independent like in the United States. It's really a government decision to buy gold and to sell treasuries at the same time and lower your dollar reserves. This is a process that just got started, and it will intensify as we keep deglobalizing. And as you'll see, countries that are refusing to do business with other countries, countries that are raising tariffs on other countries, countries that are restricting trade with other countries, disrupting trade. It's an ongoing deglobalization. And in that world, inflation will be higher, commodities will be a lot higher. Oil, food, it's what we're seeing right now is a real bull market because it's not retail that's driving it. This is institutional, sovereign money that's going into gold and silver. And what they are both pricing is a central bank regime around the world that is allowing inflation to play its course as long as it doesn't get erratic. And if that continues to be the case, bumpy rather than erratic, then gold and silver are going a lot higher. If the narrative is up, then you can trade that. When does the narrative start to be at risk? If you start to see the market thinking that it can start to price in a rate hike. If that happens, you need to start on thinking about your strategy for gold. I'll give you an example. For myself, trading a lot of mining stocks, a lot of leverage ETFs. For example, the GDXU that I hold is a 3-time leverage on the mining shares. It's up about 100% in the last month. So when you trade that and there's a change to the narrative, you have to exit. Not the same with physical, of course. So that's why gold is already trading as high as it does. And silver is joining it, right? Which is very important because it
confirms it.
Yes, exactly. It expands the bull market. And so it's very good right now. I would say it will take a lot for the Fed to change tune. The markets might change tune before the Fed. And it will be up to the Fed to reassure the markets that that's not what they consider erratic. One thing that is critical is the price of oil. So I suggest you start looking at the price of oil on a daily basis, just one time a day. Look at where it's going. If it's going into the triple digits, so 100 and higher, start to be concerned. Start to be concerned. So that's one thing you should really look at. The price of oil, triple digits or double digits.
Triple digits, does that mean a resumption of rate
absolutely.
hikes? Rate hikes?
Yes.
Okay.
It means that the market will start considering it. It will start to be priced in. The narrative for gold and silver will not be as strong as it is right now. Profit margins for companies will shrink, et cetera, et cetera. It's not good. So that's one. And as you know, I'm sure you reported this, the strategic petroleum reserves are very low right now, 40-year lows, because the Biden administration was betting that they could replenish them with oil at like 40 or 50.
And they delayed buying more because of the high price.
Yes, exactly. Yeah. So bad situation there. And what the market is really, again, going to the big picture, what the market is really pricing in is because half the country is, love Trump, and half the country hates Trump and is willing to vote in a senile, president, then you have real division. And if you have real division, you can't legislate meaningful reform. And so the regime or the status quo stays. And so you keep spending, you keep the deficit unsustainable. And if the market prices that, then it makes a lot of sense for gold to do what it does, right? So that's another thing to keep factoring in. As long as there's huge division, you're not going to see a lot of changes to the deficit or to the status quo, which means inflation will stay high because of the deficits and whatnot. So keep that in mind as well. It's very good for gold and silver.
Those are excellent points. Thank you so much, Lior. And I just want to let people know right there on the screen is the Wealth Research Group website. Please sign up for their email blasts. Dude, those are awesome. I enjoy them. I read them. And definitely have to check it out. Also, the wealthresearchgroup.com/portfolio, I believe it was. Check out that.
That was my portfolio.
Yes, check that out as well. Thanks so much, Lior. Great to have you as always.
Thank you for having me.